So now the focus on the Fed. Here's $1, one Janet Yellen, and the Federal Reserve building. Okay, why is it such an important decision? Why did I make this special slide for you? Well, first of all, the Fed this time, well, it has 8 meetings a year, but 4 are more important. This is one of the more important ones. Why? Because it consists of fresh forecasts and a press release. It's been talked about for months if you're following financial press, Forex Crunch, FX Street, and well, of course, other sites like Bloomberg, Reuters, and you name it, everybody's talking about that. For a change, there's not a full consensus, okay? 2 primary dealers do see a rate hike, which is quite unusual. Usually there's only one or full consensus that the Fed will not hike. That's BNP Paribas, a French bank, and Barclays, British bank. Both are foreign banks, I mean, for the United States. But it's weird to have 2 banks saying that the Fed will raise rates. And it's also important because other central banks are also waiting to hear from Yellen and her colleagues. So it's the ECB, it's the Bank of Japan, maybe looking to see what Yellen will do. Before we'll continue, I'll just mention once again the demo contest. FX Street is back once again with the new edition of Trader of the Year, sponsored by Hantec Markets, and you can win a total of $16.5 thousand US. Just go to fxstreet.com/info/contest. Let's continue. We explained why the event is big, and now let's talk about why we will not see a rate hike. Okay. First of all, the political reason: elections are coming. Donald Trump said he's a low-interest guy man, and he wants to replace Yellen. Yellen and her colleagues do not want to be the center of Trump's attention. But also for Clinton, it's bad. A rate hike now could hit the stock market before the election, and she's sort of the incumbent, running on a 3rd term of Barack Obama. In addition, the Fed is dovish. So if they're in doubt, they stay out. Dovish, not all, but most of them, including the last chance to express some data that was from Lael Brainard, a permanent voting member on the Board of Governors, and she was very dovish. The 3rd reason is just data. Low growth, 3/4 of low growth, Q4 2015 and the first half of 2016. Wages, after moving higher, they're once again in retreat, 2.4% year over year. Retail sales were poor. Services sector outlook, according to the ISM non-manufacturing PMI, was poor. And all these figures outweigh the solid job gains. And of course, inflation is just not going anywhere fast. So that's the short version. Of course, we're following the data for a long time. Everything leads to a conclusion not to raise rates. I mean, especially with the dovish Fed. The initial focus, assuming, of course, we do not have a rate hike today, we'll watch the dot plot. The dot plot looks like this. It's a measure of what various Fed members think the interest rate will be at the end of this year, the next year, in 2018, and of course the longer term. I think this time also have a forecast for 2019. In any case, the initial focus will be on 2016. This year, the last dot plot showed a chance, sort of 2 rate hikes this year, downgraded from 4 back in December last year. Anyway, I assume most market participants assume that it'll be downgraded to 1 hike this year. That means not in November, because there is no fresh forecast and no press conference, but in December, also after the elections. That's sort of the mainstream view. Okay, if the dot plot will be downgraded to no hikes this year, that will be very, very dovish, very bearish for the US dollar. So that's the initial focus. It's released alongside his statement. Well, before the statement, I'll mention the forecasts. So the Fed forecast will probably acknowledge reality: lower inflation, lower growth, and stable employment. These forecasts will change only just a bit, and will not tell us something we do not know. Downgrade forecasts. This time the downgrades, I think, will not be huge, but still meaningful. And the outlook until 2019 could be interesting and usually, and probably too optimistic, not reflect. I mean, again, the Fed tends to downgrade its forecast. Now, the statement, of course, we have the statement every meeting, not only this one, not only 4 times a year, but 8 times a year. Nevertheless, it's of course still important. The positive things, that on one hand, the glass half full, is that they'll be happy with employment and happy with international developments. Brexit is not a disaster. China's stabilizing its growth. And of course, the US economy is gaining jobs. But the bigger questions are inflation. Is it still stable? When the Fed talks about long-term inflation, it remains optimistic. Everything is okay, even though in the short term it's weaker. If they express worries about inflation, if they're not certain about the inflation outlook, this could be bearish. And what about growth? Is it the same as inflation? Are they worried about growth or still see a better second half? Again, we have the Atlanta and New York Fed GDP nowcasts, and they began the Q3 with 3.6% growth hopes, and now it's down to 2.9 if I'm not mistaken. Anyway, let's see if they're also worried about growth. Well, we'll have one dissenter, Esther George. She already expressed her desire to raise rates. She's dissented in the past quite a few times to the hawkish side. That will not be a surprise. Statement. And then the Fed, Yellen speaks half an hour later. We'll have only 30 minutes to react to the dot plot and the statement. And Yellen, apart from her first press conference, is very boring. Yeah, she does not want to rock the boat. She does not want to say something that will be interpreted by markets in a way she doesn't want to. She uses a lot on one hand. On the other hand, the press initially reads the statement, then answers questions. She's not special in this thing. Also, other central bankers, especially American central bankers, just try to keep you asleep. Anyway, it's going to last over an hour. So I think we will see movements during her press conference, but they will not be related to her speech, but rather to responses to the Fed decision. Okay, we'll begin hearing from John Hilsenrath of the Wall Street Journal, a prominent Fed watcher, Bill Gross, previously from PIMCO, now Janus Capital, and other pundits across the financial press. They will begin shaping the narrative. They will begin telling us if the Fed was dovish. These things are, of course, unclear. It might be clear, of course. And things will begin taking shape. Then we'll see some reactions. It will probably not be related to what Yellen says. Of course, Yellen can always surprise. Again, I think the message will be not now because data is not that strong, but we're definitely going to raise rates in December. Anyway, we're going to see the first immediate reaction, of course, when things come out today at 6 GMT and 6:30. Another reaction when Tokyo opens. And the final verdict, the full narrative, will take shape in the European Open, this time tomorrow morning. Conclusion, to wrap up this Fed preview, open door to December is the key for the US dollar reaction, and it should be slightly positive, okay? A closed door, if they remove the chance of rate hike this year, the dollar will plunge. Watch out for the general tone, optimism vs pessimism. If we do have a surprising rate hike today, despite uncertainty, it'll be still a huge surprise, and the dollar will rise across the board. Okay, remember that in the more mainstream case, that we do not have a rate hike, and that they still open the door for December hike. That is dollar positive because the US dollar is the cleanest shirt in the dirty pile. Okay. So that's the Fed preview. Let's see if there are any questions. Yeah, thank you, Adinda, for more information about the contest. Well, I don't see any questions. So that's the Fed preview for now. Let's continue to